Point of View is brought to you in association with Stanbic Bank, moving forward, and Glofert Company Limited, growing growth.
This is the Point of View. We follow the big stories, we get the right guests, we ask them relevant questions, and we come up with some useful insights every time on Citi TV. My name is Bernard Avle. It's a live interactive show. We have various ways in which you can get in touch with us. If you're watching on social media, our hashtag is Point of View, and if you're on Facebook, it's at Citi TVGH. It's a huge story. Started in August 2017. It had a major inflection point August 2018. And guess what? In August 2019, the story is still not over. The Bank of Ghana says this is the last major action it will take to bring us out of the woods. But some people doubt that. We're going to look at the long-drawn financial surgery. Ghana's financial sector is in big, big trouble. We'll find out what has been happening and how to resolve that with some very interesting people. When we come back, I'll tell you what to expect. Stay with us. Welcome back to the Point of View. So on Friday, the 16th of August, the Bank of Ghana announced the closure of 15 16 savings and loans companies and 7 finance houses. That brings to 23 the companies within that sector that had gone down. Well, before that, a few months before, May 31, 347 microfinance companies were also closed down. And that was after 9 banks also collapsed prior to that. Tonight on the Point of View, we'll find out how we got here and what the reaction has been. And I'll be speaking to some very important people. I'll be speaking to the receiver. He's joint receiver for UT and Capital Bank. He's sole receiver for 347 microfinance companies, and also the receiver for the 23 savings and loans and finance houses. Eric Nananipa will be joining me on the show. Also have a very outspoken, makes economics very simple, CEO of Dalex Finance in the person of Ken Thomspon. And then the man who's been pointing out some of the challenges in the savings and loan sector, Mr. Tweneboah. All are my guests on the show tonight. But before I talk to them, let me take you to various parts of the country to bring you quick reports on the reactions of customers to the troubles following the announcement of the closure of 23 of these companies. I'll start with Anshel Iziwu. She was at Medina, where customers of Women's World Banking were not very happy with the way the announcement was made and the fact that they couldn't access their funds today.
Today being the first working day after the major announcement by the BOG, these customers thronged the premises to verify the news they heard. Uncertain about the status of their deposits, these agitated customers demanded the immediate release of their funds.
"2 weeks time. Wabe fraying. Na ya be hu se wo discover ma yen so wan fa ma yen ya sre nana ya pa cha wo hwema bra abo ni bitiri so ya be ka me fem sisi abata wo fu bebre yesu nana yesu frɛ wo hu ya mobo nana Women's Bank die aya bank e kwoma mba nyina ebe itime sra mu na mpanimfo mumbre mu mayen madawro ma mumbre mu mayen pa na yesa."
The Bank of Ghana licensed the Women's World Banking Ghana as a savings and loans company in October 1996, after its status as a non-governmental organization and a private limited liability company. The BOG cited Women's World Banking Ghana's negative capital adequacy ratio and net worth to be a major contributing factor to the revocation of its license after it engaged management and board of the company on the need to restore its paid-up capital. Even though government says it is committed to paying depositors' funds after validation, the customers are having none of that.
I have served in GN Bank at Koduah. My money has locked there. And I rushed to this bank again. And the same thing is happening to me. Today, I have to go and pay something. And I've come all along from Koduah to this place and look at this queue. I'm not able to give me my money unless I go through the process before they'll give me my money.
Others, however, have confidence in the government to pay their deposits.
So far as I buy the answer, I can't dear me a man. Minim say Danya, Miss Abeka Misika, a better answer me.
To be sincere with you, I won't lie to you. I'm not afraid that my money will go out like that because I know this bank not today.
As the first allied savings and loans company also at Medina, the office was opened with less activity. According to the Bank of Ghana, First Allied in June 2018 was unable to meet customers' deposit withdrawals, stating that deposit liabilities were grossly understated as at the end of June 2018. Also, the institution purportedly advanced credit facilities to various institutions, predominantly churches and schools, without proper documentation. It appears customers would keep on massing up at various financial institutions that have had their licenses revoked by the Bank of Ghana. The receiver for these financial institutions have set out processes for these customers to get their deposits back. However, some of them don't know these processes or are oblivious of the processes and are thus angry and agitated whether they'll get their monies at the end of the day. Reporting for Citi News from Medina, my name is Ansheli Ziwu.
So that was Ansheli Ziwu's report. So mixed reactions from the customers. Anita Arthur also went to town, Tudu, and found out from customers of some financial institutions what they made of the development. These customers were not very happy. So we'll be bringing that to you shortly. But I'm going to take you around quickly to look at some of the numbers. So since August 2017, what has been happening? Well, we initially had UT and Capital Bank, two banks which were dissolved and they were taken over by a receiver. And then the remaining assets and liabilities were taken over by Ghana Commercial Bank. That was followed rapidly by another 7 banks, which led to the formation of the bank known as Consolidated Bank. So you had 9 banks evaporating. Then you had 15 savings and loans companies announced only on Friday. So we had 40 savings and loans, now down to 25. Then you had 39 microcredit organizations also going down, 8 finance houses going down, 2 non-bank financial institutions, and wait for it, 347 microfinance companies. So now there are less than 120 microfinance left. So in total, 420 companies have ceased to exist. So even if they each had 20 staff members, where does that leave us? Very interesting indeed. Now, before I bring my guest in as well, I want to show you what the Bank of Ghana said about the behaviors of the savings and loans companies, because it rings very familiar. There were 6 major reasons, according to the Bank of Ghana, 6 behavioral traits exhibited by these savings and loans companies from the point of view of the Bank of Ghana. Number 1, levels of capital held by some of the companies were in violation of minimum regulatory capital required by the Act 920. There was excessive risk-taking. There was the improper use of depositors' funds. There was corporate governance weaknesses, creative accounting practices, and persistent regulatory breaches. We'll discuss this with my guest shortly. Let me take you to Anita Arthur's report from Tudu in Accra.
Started its cleanup of the financial sector in 2017. By the end of 2018, 9 banks had been collapsed. This was followed by a recent cleanup of the microfinance sector, where 347 of them were closed. The most recent sector within the financial sector to be affected by the cleanup is that of the savings and loans, where 23 savings and loans and finance houses have had their licenses revoked. A visit to the branches of UniCredit Savings and Loans at Aboagye and Kaneshie showed that they were open with no activity. The situation was the same as the Kaneshie branches of First Trust Savings and Loans, Adom Savings and Loans, as well as the Dabrakar branch of First Allied Savings and Loans. However, at Women's World Banking Savings and Loans at Zongo Lane in Accra, many customers had massed up to demand payment of their deposits. This is in spite of the fact that a receiver has been appointed by the central bank to handle such processes.
Almost 2 years, getting to 3 years. All the mama investments. And I say to save you, Miss Kayna, Mpabwa, and my baby, and the coach, and the better to say, Miss Craft and Fannyama. It says somewhere for my child. We are Mobana, Monsabana is sick, and maybe no physical mania bread. And Patron Mojis, Miss Abakiska.
My 14 years. 14 years in it. Oh, Mr. Kawaha had a dozen. So I must see I'm fairly form, but Nimse be a 1 month and Sana, Yansaka scan. I know more Kaka, and Mamati. I need to know my pass and Befel Media. The bar says o'clock. Young will be 8:30, best sell our Mumai.
My year Jumawa has say, me no 190 good 16 years. My year savings will happen. Now I wonder, I am one say, Saturday we are to banging. I couldn't make us say, I am one say, Thursday, my baby is 700 million. I say, yeah, the mommy. Maybe it sounds to your deposit that Thursday. Now I will come as you been a two to my council. And also, you're okay. Emma may or my text message maybe be on my phone. So, but that was Friday night. Me cry me friend woman say me ba be yiska wa say no wa mo ka say saade a membra na me cancel say me nya yinti mo ntwen nya me boa the following day. That was it will be Monday na wa mo see you until Friday and 6 o'clock news na me te sasim I was shocked. Sad news we so e ba ye no that 23 banks no about be 4 months 3 months ni na women's wedding any until ye nyina na ya okay say you say where we are saving. We are very safe. Iti aboye pusa because enka 23 we na buy and can be for long time ka ye nyina ya be prepare ye ho na nka ya ba be den abeyi ye sika ba ye hu bibia asa enti ama ayeye ya tisi amoka se mo ma ye forms na ye mbe fill forms na mi say man ko school me dey fill form and for instance me di mi sika be to no ma me forms bia. And to see our forms now, almost see and fairly either. Make us say me want me dates, me want me bank BB, me want my accounts number, me want me ding. And this is a we go bank and I say, "Oh, bet you am a card." Yeah, there's no need of the forms. The mama say, "Some bank no data." I say, "One more share your data."
Me BB as I'm paying 5 million. Me go to Yaka. Me name say Saudi and Haba. Me pay you coin and after the Friday no do. I say, I was an anchor ban on my 1 week. No, Casa say, oh, be a baby, say, I'm feeling form. Because school, eh? Me no, me no be uncle school. Me to me feeling form. Me to me see can also hear the mommy. Me to me feeling form too. See can be to me feeling form. Yeah, Jay had here because ye na e good for your uncle school. How the way ye no? You to me take. How far is it come?
So it is the first working day since the Bank of Ghana announced the closure of some 23 financial institutions, and I am currently standing in front of Women's World Banking Savings and Loans. And as you can see, there are many customers here who are agitated and demanding that they get their funds as soon as possible. Reporting for Citi News, I am Anita Kisimreku.
Well, that was Anita Kisimreku's report. We have other reports from across the country, but I won't take you there yet. Let me introduce my studio guest. I have Ken Thomspon. He's a man I call when I have difficult problems. I want simple answers. Ken Thomspon takes no prisoners. He's the CEO of Dalex. Dalex is a financial institution, very strong, untouched, very healthy. Where in the chain do you belong?
We're finance and leasing.
Finance and leasing.
Finance and leasing.
So they are big. They are big boys.
That's where
I also have my friend Tweneboah Aboagye, who's the president or executive secretary of the GHASALC. They are the Ghana Association of Savings and Loans Companies. So he's speaking for a lot of the companies that are gone down. There were 40, 15 are gone, 25 left. Welcome to the show.
Thank you.
Good. A few moments before I came on air, I spoke to Eric Nana Nipa, who's incidentally joint receiver for UTN Capital Bank, receiver for the 347 microfinance, and now the 23 savings and loans and finance houses. I asked him what his mandate was for the savings and loans. Here's what he said to me. happen. So this week you've been given a new responsibility.
Yeah.
23 companies. As I'm speaking to you, there were reports that at one of the companies, Women's World Banking, people had massed up looking for their money. It seems as if there isn't enough information. So tell us in a nutshell, what are you going to be doing within the next, 30 days for the savings and loans customers and finance house customers?
Yeah, that's right, Bernard. I picked this up actually. I picked it up on your 12 o'clock news, the Women's World Banking in Kumasi.
And also in Medina.
And also in Medina, actually. And then First Allied also. There was this rush. And I picked up the sentiments of the depositors, mainly to do with information flow, not knowing what is going on. And permit me to use this platform to assure them that we are working assiduously and to set out and lay out what we are doing and going to do in the next 2 to 3 months. I have representatives on the ground, all right, deployed across the 500 or so branches of the 23
Savings and loans and
finance houses. We have our men deployed, and they have claim forms, what we call proof of debt forms, POD forms. They have them available. I'm urging these customers to approach them, pick the forms, fill these forms, attach the necessary documentation, and return them to the places where they pick those forms. My reps will very quickly validate. Okay, customers have up to the 12th of September to submit these forms, filled with adequate supporting documentation, up to the 12th of September. My reps will be validating, and we've given ourselves, all things considered, to the 11th of October, close to 30 days. To the 11th of October, documentation and others and corporation permission for us to have validated these claims that we have received. Okay, having validated the claims that we received, we will communicate to the depositors the status. Having done that, then we move into paying position, and then we will pay. But let me mention, Bernard, I think it's very important that we all appreciate this, that when we talk of payments, this conversation has been about funds being provided by government, the 900 million. That is one pot of funding, all right? But the other one, which is also very significant, if not more significant, has to do with asset realizations. Okay, asset realizations, we secure the assets, we realize the assets, and the process thereof is what we use to pay off depositors and other creditors in order of ranking. So assets, that stream of discussion is usually something that we need to advert people's minds to, that it isn't only about the government's money.
So in terms of savings and loans and micro and finance houses, has the money government giving you, is it more than the expected realizable assets?
Well, at this point, I know that government is going to make provision to provide funds for us. I don't.
How much is government giving you?
I don't know the quantum yet. I have a meeting with my principals to discuss that in terms of quantum and terms and timing of release and all of them. So
wow.
I'm not able, but I do believe that within a day or two, all these things should.
But what's the size of the whole? There were different reports. I remember there was a finance report that there was the size of the savings and loans and finance house was 6.5 billion. Somebody also did a calculation and said it's about 2.5 billion cedis. What figure are you working with?
Well, at this point, so many figures being thrown up in the air. We have only just moved in, so I'm sure that come Friday we would have a certain idea of the figure, and of course also in engaging with Bank of Ghana between now and Wednesday, Thursday, we should have an idea of their figure. And then, of course, moving on, we will validate.
But if the microfinance is anything to learn from, you had 900 million from government versus how much you feel you will realize. Government will definitely have to give more than the realizable. or it's a different scenario?
Well, it's a different scenario altogether.
Okay.
I mean, government isn't bound, government is not compelled.
Okay.
It is a strategic decision that government is taking to do this. Okay, just so that it mitigates the systemic effect it will have on the economy, you know. So it is government to do that, and it is entirely at the benevolence of government to determine.
Welcome back. So there's more Eric Nipa. Let me start with Tweneboah, Koduah, and then Ken. Gentlemen, welcome again to the show. So you are not surprised about this, are you? Because you speak for the 40 savings and loans companies who are now 25. You've been expecting this, haven't you?
Yes. For some time now, we were all expecting that the central bank acts and act quickly. And we woke up to realize it on Friday that the central bank has taken the action that we were all looking for. Of course, except that we had some few concerns. But whether we have concerns or no concerns, the action needed to be taken, and it has taken place. And so we are looking at what are some of the causes. How did we get to where we got to? The Bank of Ghana was generous enough to tell the public, but we believe that we need to do more than what has been put out there to make sure that we do not go back to where we fell. From management level, what were some of the things that management did that were not in tandem with the law? Regulatory compliance levels with some of the institutions were not as required. If you look at risk management framework that were put in place, look at the credit underwriting processes, some of them were not as even stated in their own policies. Take a critical look at the corporate governance standards that were being used. So with all these things, and of course, the regulator too slept along the line. We cannot ignore that. And also the risk appetite of the whole industry. You realize that customers were also demanding higher deposit rates. And of course, if you are an institution who is ready to take the high risk, as for the customer, he will be willing to come and put the money there. These are some of the few things that we believe that there's the need for us to critically look at it. And of course, some of the institutions, yes, had some challenges, but you realize it never came out. How did it happen? Because they were able to manage their customer relationship very well. So going forward, these are some of the few lessons that we believe that as industry, the regulator should continue to do the good things they've started and even improve on it. The operators, we should also continue to make sure that the things that did not help us, that brought us to the ditch, we depart from those things and make sure that we get to the point that we expect.
Ken, do you think we are learning from our mistakes? Because August 2017 was when this whole thing began. And August 2018, the next round continued. Now, in our research, we found out that some banks who are taking money and were found out in August 2017 put the monies in savings and loans that we are now collapsing today, 2 years later. So it doesn't seem as if there's been any learning, unless I'm mistaken.
Okay. First, let me say that really, you know, the clips you showed about the depositors, you know, it really makes my heart, it breaks my heart that people with, you know, we have so little and we have to lose so much, employees, all those things. But I'm not surprised. I'm surprised that people are surprised that we are where we are, because all these things that the Bank of Ghana has been talking about has been the subject of tabletop gossip for the last 5 or 6 years. We went through a period of just madness. People were spending, we saw it, the cars, we saw it, the flights, you know, everybody having board meetings in Dubai. We saw the people building estates. We saw the buildings. And of course, it wasn't a problem for so long as government had money to spend. As soon as the money stopped, the music stopped. I mean, I don't know why people, because we all know what was going on. I mean, the buying of media houses. I mean, people were spending. Where do we think all that money came from? It was depositors' funds. It was depositors' funds. So for me, I think really, I mean, what?
So you guys were not surprised?
I wasn't surprised, but that's why for us, for example, we changed our strategy a long time. We're not surprised, but it was coming. It was. I remember there's a gentleman who came to us to borrow. He had set up a microfinance institution, and he wanted to buy a Nissan, one of these new Nissan Patrols, and the car was more expensive than his capital. I said, I mean, are you crazy? So for me personally, I wasn't surprised, and I'm surprised that anybody's surprised.
Let me just run through the 6 reasons briefly, because I want your comment. You're saying all industry watchers would be lying if they said they were surprised by the kinds of behavior they spoke about. Excessive risk taking without required risk management to function to manage risk exposures. Levels of capital held by some of the companies were too low in violation of the laws. Point C, the use of depositors' funds to finance personal or related party projects. Corporate governance weaknesses with weak oversight, poor accountability, and overriding of internal conditions. Look at that. Creative accounting practices. Creative. I thought creativity was a good thing. In accounting, it's not. You are a chartered accountant, UK. And then they said persistent regulatory breaches. Okay, you're telling me that none of these things was unknown to industry players?
There's nobody who's in the industry who can tell them they didn't know this wasn't going on. There's absolutely nobody.
Use of depositors' funds to finance personal or related party or businesses,
you see,
on terms that were not commercial, leading to little or no income accruing to the relevant savings and loan companies.
I mean, there are some institutions where 70% of the loans are given to related parties. They are friends.
70%?
Yes. I mean, how are you going to collect from your own family? So for me, it's not surprising. And we knew that this was coming. I can't
What
say...
did the scale... Okay, you knew it was happening. Did you know it was happening on the scale of it was happening?
No. I didn't expect it on this scale. I didn't expect it on this scale as well. But I knew that at some point, the music could stop. And the music stopping was government spending. As soon as government didn't have money to... You couldn't borrow as much and spend as much, the music would stop.
So you mean government, in a way, was encouraging this by...
Okay, so no...
How is that?
Okay, so what was happening was that you were creating bad loans. To cover up the bad loans, you were creating more loans. But remember that the government's the biggest supplier, government is the biggest contractor, the government is the biggest employer, government is the biggest everything. So everything that you do, if somebody says, they'll buy your car and they haven't paid, if you walk through, you realize that you're expecting something from the government. So the moment the government didn't have money to spend, you couldn't make new loans to cover bad loans. The music then stopped.
Wow.
But this, Bernard, I've been talking about this for the past 3, 4, 5 years. I mean, the music will stop. So for me, it doesn't surprise me. And I'll be surprised if anybody says you're surprised that this was going on. I'm really surprised. And another person will be a liar.
So if you look at the scale, 420 companies, we give the breakdown, 9 banks out of 30-something. Microfinance, 347 out of 400 and something. That's like 70%. It's more like institutionalized behavior.
Yeah, but there was a time when everybody was opening a microfinance company. And they opened a microfinance company. The next thing you see is they have a big office. Next thing you know, they have about 15 cars. Next thing they say we are giving interest of 7% per month or 10%. The only way you're heading is south. It's common sense. What really I find painful is that the public should not have to suffer for this. Somebody has to, guide and, ensure that these things don't happen. But the only way you are going is south. Where else are you going? I mean, there's another instance where, this company set up and he's taking depositors' funds of 1 million. And so they said, so how much loans have you given? He said, 70,000. What did you use the rest for? Operational expenses. I mean, please.
1 million, 70,000 loans, the rest operational expenses.
Yes. But you see, sometimes what we all forget is that the money that you take off people to give out loans is not your money. It's depositors' funds. And a lot of times people get confused. So they're looking at their bank account, oh, there's 50 million. Shall I buy another car? It's not your money. And as a financial institution, all you're doing is you're taking the money, on lending it, collecting it back, take a slice of the profit, and share. Wow. So, for me, that's the issue. But what I think really we need is that, Bernard, and this is a point I'd like to make very forcefully. You see, to have our financial sector controlled by foreigners is a threat to national security. It's because only indigenous financial institutions will invest in certain institutions, Ghanaian institutions. And I'll give my example, Dalex, maybe Fidelity Bank, probably even you. I mean, the foreigners are not interested. Different pharmaceutical companies, trading companies, agriculture. The only institutions that will invest in these indigenous institutions are the indigenous finance institutions.
And unfortunately, it's the indigenous ones predominantly who are going down.
No, but hold on. It's a process. It's a process. And what the indigenous finance institutions need is tough love. And nurturing to help them to grow and to become stronger. If you go into history, when, if the financial crisis in America, you know how they used to prevent a run on the banks, they'll get their relatives to queue. So relatives will queue and will take out 1 cent, take out 2 cents, you take out 3 cents, so that by the time it gets to the person who really wants their money, the bank is closed, then they queue again. Wow. So it's a process.
We'll take a short break. When we come back, I have more questions. Tweneboah will talk to me, because what Ken Thomspon is describing is almost organized crime. He's saying that we all knew it was happening. He didn't know the scale was that large. We'll hear more from Eric Nipa. We'll take your comments as well. This is the point of view, trying to unravel the great financial mess that we're in and how government is dealing with it. Stay with us. Welcome back to the point of view. We are looking at the great financial purge. Started August 2017. It's been 2 years and we're still on it. Tweneboah Koduah is Executive Secretary of the Association of Savings and Loans Companies. Ken Thomspon runs Dalex Finance and Leasing. Tweneboah Koduah, from what Ken says, that you all knew that this was happening, the way he describes it is systemic, and it's... the first word that came to mind when he finished speaking was organized crime, i.e. taking depositors' funds and blowing it. And this was being done by probably 40% of the industry. Because if you look at the numbers, we have the breakdown of the numbers. 420 institutions, 9 banks, 15 savings and loans, 7 finance houses, 31 microcredit, 347 microfinance. So the scale and the regularity. I mean, as we speak, nobody from any of your institutions has been properly prosecuted. There are civil cases where government wants the assets.
Okay.
What's your comment?
Okay, so I don't see it as an organized crime. The system created an outcome. What was the system? Mind you, the report from the central bank, even reading what the central bank released last Friday, doesn't suggest that all of the institutions were engaged in the same irregularities. There were variations. There are some of the institutions that their main problem was non-performing loans and non-performing investments, and the central bank went on to look at the impairment that led to their insolvency. And an insolvent position could come up as a result of various reasons. But of course, it is also instructive to note that the general thing that was happening is as you've described and as Ken was stating, which should tell us that, yes, that was the general thing. If you put everything together, yes, we were seeing these things running most of the institutions. But one thing that I have learned out from all these things was that you cannot continue to outsmart the system. One day, you will get crushed. And therefore, it is incumbent on us to make sure that the system put in place by the central bank currently, the system put in place by the law, the institutions who are left currently, how do we make sure that we comply and deal with the issues as they come? Another thing that I want to also clear our minds from was the fact that we sometimes say that the microfinance are too many. They are not too many. The reason is that how many districts do we have in Ghana? We have 250 plus. If every district is supposed to have one microfinance, now there are 137 microfinance. It means some districts will not have.
But they were all in Accra and Kumasi anyway.
So it was not about the fact that they were too many.
It was a distribution.
It was the distribution, and it was a policy that went bad.
Interesting.
And so we need to now look at how do we make sure that we do not go back to the process.
Let me show you something. So I asked Eric Nipa to tell me what he'd done with the microfinance companies. And he says what they found is actually worse than what was feared. And he actually said to me in the interview that he wasn't sure if the amount of money government had voted would be enough to cover what they were finding. I just want to show you a quick excerpt of that, and we'll come back in. So Mr. Nipa spoke to me about the work they've been doing on the microfinance, and it doesn't make for pretty hearing. Quick one.
In terms of, we say that we have validated 600 million in terms of value. Okay, that is the whole amount we have validated. But of this 600 million, we are not paying everything and everybody, not now, at least not now. So out of that, we are setting a cap of up to 10,000 cedis. So if you apply that cap to the 600 million, what that means is of the 600 million validated, in terms of up to 10,000 potential receipts or payments, you have 90 million. So that is where the 90 million is coming from. So there is 90 million to pay. Okay. And unfortunately for us, I'll say this has been one of the challenges. This area has been one of the challenges in terms of speed of payments. Out of the 90 million, I'll say that we have paid we are processing to pay, and we have paid almost about 35%. You know, so it's not been as positive.
It's very slow.
It is slow. We would admit that, and feedback we've gotten, particularly from your program, has been very helpful. You know, because the feedback we got from the phone-ins really jolted us and made us sit up. We introspected, we engaged with CBG, our partner bank, and we have examined the whole process. You see, so we are very confident that this week there will be a significant difference for the better. There will be more payments coming up. You know, we are engaging with CBG to see whether it is possible for them to extend opening and processing hours, you know, operating hours, and even including weekends, just so that we can satisfy.
So payments are going to ramp up in the coming weeks.
In the coming weeks,
actually. For the microfinance people.
For the microfinance.
Just a final point on microfinance. You mentioned earlier on the radio interview that about 20 companies had said that they were willing to pay claims to depositors.
That's right.
Irrespective of what you find.
That's right.
Can you confirm that?
That's right, Bernard. I think for us, it's one of the major highlights. All right, that we have about 20 companies, microfinance institutions, whose licenses have been revoked. About 20 of them have approached us. You know, we've been engaging with them, and they have indicated that they do not want any government payments or handouts. That they are willing and able to pay all their depositors 100%, and not just the depositors, but their entire creditor population.
Wow.
You know, so it is good news indeed. And what we have done with them was to sit with them and establish the total liability position. That's what we did to them, just so that we are all on the same page as to the quantum of exposure, the total quantum that they have. You know, we have done that. What we've also done is to issue a statement of undertaking for them to execute, showing that indeed.
Can you name these 20?
I will keep it confidential for now.
Until you are through with that process.
Right, not until I'm through, even before I'm through with the process, but I need to discuss further with them and with my principals.
So that everybody's clear how it's going to be
Precisely.
done. People don't rush there and go and cause confusion.
No, exactly, that is it.
Okay.
Because when we've closed out on this statement of undertaking execution, the next step I'm going to do will be to start engaging with the customers in a town hall meeting fashion to let them know that this is the intention, these are the timelines, and these are the pay points.
So we're going to have a town hall meeting?
We will have it, yeah, we will have.
That was portion 2 of the interview. The whole interview is an hour, and I'll play it during this week. We spoke about a lot of things, and he revealed that a lot of the microfinance companies they found were dealing in forex, even though they were not supposed to do that, and they hid those transactions from the auditors. But because of the work they are doing, they found this out. They also found that a lot of the microfinance companies were lending way in excess of what they were required. And again, this was not on the balance sheet. In fact, it would appear that some companies declared profits, whereas what was actually there was rotten losses. So I'm not sure whether we've even accepted and agreed the level of criminality and the level of underhand dealings from our association. I mean, it almost beggars belief that companies were running, so they would take money, put it in a related party, and just be spending it, knowing that it was hidden from the balance sheet. And this was happening for years. So I'm not sure if you say it was systemic and therefore it's almost like everybody permitted it. There are people in your associations who really need to face the music.
Of course. If I mentioned regulatory compliance, if you fail to comply to the laws, you should be dealt with. And there are enough provisions in the Act 930 that tells exactly what the central bank should do when you go against certain rules. And so I am also looking at it from the other angle that Bank of Ghana hitherto did not have enough capacity to even identify some of the things going on. And that is why I always recommend that even before somebody works in the supervisory role in the central bank, she should have some level of experience, even how those industry experience, so that you'll be able to even detect some of these things.
So if we made him governor,
he will even know before the people present their reports.
Is it true that, Ken, there are tricks of the trade that if you haven't done professional banking before, you can't properly supervise?
It's not so much about professional banking. It's about having a certain level of competence, technical competence to be able to do these things. So you either have it when you start, or you can be trained to have it. Yes. So as long as you have the requisite training, you should be fine. I don't really see.
Now let me ask you a few questions. When I spoke to Mr. Nipa, he said there were 152,000 depositor claims that had come to them. They had processed 80,000. The 152,000 depositor claims, this is for just microfinance, was equivalent to 1.4 billion cedis. He even said they were expecting up to 1 million claims. My question is, the scale of this, and this is just microfinance, can you tell me the scale of this on the economy? Because if you have so far 152,000 individual claims amounting to 1.4 billion for just microfinance, we haven't added savings and loans, we haven't added banks. What is the size of this, and what will be the effect?
I don't want to. I don't want to get into trying to even estimate how the size will be, because I don't think anybody really knows. But in terms of the economy, think of, so first, you remember that the financial sector was one of the fastest growing sectors in this country. So think of all the jobs that have been lost. Then think of all the people that supplied services to these institutions. So the cleaners, the caterers, the air conditioning repairmen, all those people.
Photocopy paper,
everybody.
People, air conditioning repairers. Everybody.
So suddenly, all these people are out of work and they don't have money to spend. So what happens? That means demand is weak. Demand is weak in the economy. And if all things being equal, what the government really would do was to stimulate the economy. It will create a bubble. So to create a bubble, what would you do? It will spend. So start to say, okay, I'm building a road from Accra to Nyankpanduri. And that creates a whole economy. But I don't think we have that capacity to spend at this moment. And so demand is going to be weak. And when demand is so, the watch seller will feel it, the cocoa seller will feel it, the person who...
so aside from people who don't have their money's locked up.
Yes.
The ripple effect will be that it's going to slow down economic activity.
I mean, but you should be able to even see. People are not advertising as much.
Yes, we are struggling.
You are struggling. How do you struggle?
We are struggling.
You are struggling. You know, I've been on this show and I'm thinking, how does Bernard fund the program? I mean, it's an advert.
We did the first one. We took another break shortly. We'll take another break shortly.
This is such a good program.
Yes.
Really, not too long ago, I mean, they'll be queuing and you'll be turning them away.
Yes.
But that's the first. So demand is going very low. And so institutions are going to suffer.
Will it be enough to send us into a recession?
Well, Bernard,
we don't expect
a big word.
that anyway.
No, I'm just asking because if you look at the number of people, have you even added the number ones, those people? Have you added those guys?
No.
You get me? So we are talking of 420 institutions.
What's a recession?
Oh, say when economic activity gets dumping to a point where there's high unemployment and also low economic growth.
Okay.
So it's like double whammy.
Okay. And we're not there. Okay,
so you are an accountant. You don't like such words.
Exactly. You see, okay, so
high unemployment, low
if you
economic
even
growth.
look at the current, just the Friday revocation, and take the 15 savings and loans companies only, talking about only the 15 savings and loans companies, you are talking about 4,000 employees. 4,000. Now, these 4,000...
You haven't added the finance houses?
No.
You haven't added microfinance?
No.
Haven't added the banks?
No, I said only 15 savings and loans. 4,000 employees.
Direct?
Yes, this is direct. And so if each of them had certain dependents, you know the effects. Depositors alone in the 15 savings and loans only, it's about 2 million. 2 million depositors. And so that is why this receivership process is very key. And this is free advice to the receiver. One, he stated that they've learned lessons from the work from the microfinance process. We want to believe that he's learned a lot, and that one, you don't delay in giving contracts to the current employees that you want to use.
Okay.
My checks indicated that about 90% of the employees who they are still using from the microfinance level, they've not received their appointment. And you don't expect the people to continue to cooperate with you because their company's license have been revoked without giving them appointments.
He told me this morning that they had done that now, I think this week or something.
So we want to see that when was the license revoked? 31st May. So you have used people for more than 2 months without contract. That's a breach. And so what we want to see is that for confidence to come up, one, the people you think you don't want to use, lay them off. Let them know what is due them. The people you want to use them, by close of this week, you would have done all your assessments. I heard he said 7 days you should be able to do all the... Give them appointment. The one critical thing has to do with, when it comes to payouts, we want to see the receiver and CBG help the financial institutions who had placements with the collapsed institutions. Why? It's because some of the financial institutions are suffering because their funds were locked up.
So deal with those institutions
to
free up the money.
Deal with those institutions, free up the money.
I'll take a short break.
And then you're going
just to prove that we'll do a few addresses. When I come back, we'll read some comments. And then I'll try and wrap up, because what will be this? How will the financial sector recover from this? When will the recovery start? These and more when we come back. Stay with us. Welcome back to The Point of View. Here are some of your comments. Hello, Bernard. The efforts of BOG to sanitize the financial sector are laudable, but the BOG can't be done with the cleaning of the exercise because First Bank Investment is not able to pay customers. Will every customer get their full principal need from Osu? Well, this in relation to the fact that in the statement, the Bank of Ghana said this marks the end of the financial sector cleanup, and some people dispute that. Ripple effects of this financial sector cleanup would be dire for the economy. The banking sector liquidation has negatively affected the savings and loan institutions. The liquidity of these financial institutions would ultimately collapse many small businesses, small, medium, and micro businesses, which are dependent on them for funds. This would in turn render many Ghanaians unemployed, worsening the unemployment situation. Ghanaians have lost their jobs by the action of this government. Mustafa from Takrady. Ben, I went to CBG at Sunyani post office branch to withdraw. There's no money. They intentionally left no withdrawal form on the counter. I spent the whole day without money. Meanwhile, today is the deadline to pay my admission fees. Richie from Sunyani. Mr. Avle, I don't understand the banking laws of Ghana, and I need to be educated. If the government of Ghana owes GN Bank more than 400 million, why don't they pay GN Group, which they owe, so they can meet their basic needs? Well, that will be part 2 of the discussion when we speak to GN Bank, maybe next week. Thomas T says, Nanado has failed totally. The collapse of microfinance banks and other institutions confirms its management of the business. GM will surely return to power to save the situation. Archangel Jokoto says, is this how problems are solved? From the accounts of the customers, WWBG is working normally. Francis Kennedy says, so Women's World Banking was fine on Friday, business as usual, then Friday evening closed. Here the customers say they didn't attend school and can't fill forms. This is so sad. Okay, finally, Ben, please get an explanation on the connection between the banking sector cleanup and the fund managers and the Securities and Exchange Commission. Much more money is ready for the investment firm. Much more money is ready with the investment firms in which customers may completely lose their money. So, okay, let me come to you as we wrap this up. So, when I read in the statement that this marks the cleanup closure, I was a bit flummoxed because we've had listeners call in and say Gold Coast and certain other fund management companies owe them. Or is it because they are under SEC, so that one is separate?
Yes. I mean, these are not Bank of Ghana regulated companies. But I tell you, the Bank of Ghana, in this exercise, we've got to give them credit. What I say is that to comb the sector, they've used an Afro comb instead of a fine comb, because honestly, if they had used a fine comb, it would have been many more institutions would have been in trouble. Oh, wow. So, yes, so somebody has actually sat down and, taken into account.
So this is even lenient?
I wouldn't say lenient, but they've taken into account the consequences of having a certain financial system. And they've said, okay, this is the thing, the ones that we can deal with is over. We're going to now support them, nurture them, and make them strong. And we've got to give them credit for that. You can slice how they've done it in different ways. It's only posterity that will say whether or not they did the right thing, whether or not the approach was correct. But the rural banks and the asset management companies are not BOG regulated companies. So
rural banks are.
I thought rural banks were under Apex.
It's still under other financial
institutions. Okay, all right, sorry. Well, thanks.
But the fund managements are SEC.
Yes. So I don't know what plans.
When will we recover? I want your prediction. When will we get out of this?
Recover from what?
This thing.
What thing?
But Ken, you just told me there's no money. You just told me we are not having adverts. You just told me there's no money in the system. So you can't tell me.
I told you that there's no demand.
Yes, so you can't tell me. So, I mean, it's August 2019. Would it take a year? Would this get to election 2020? Would this go beyond?
Here's the deal. We're saying that we need to pump in 21 billion cedis to resolve the issues in the financial sector. That's what we're saying. And Ghana's budget is just maybe 58, 59 billion this year. That's nearly 50% of your budget.
You don't have the money.
Well,
I bet you.
I'm not an astrologer, but
it will be now. Yeah. You have a last word.
Yeah, going forward, what we expect to see, people have lost money. People have lost confidence in the banking industry. But fortunately, what we didn't do yesterday, now we have come to realize that we need to do it. Let us support the 23 banks left. Let us support the 25 savings and loans left. The 11 finance houses, the microfinance and the rural banks, let's support them. We can create our own better economy. The next thing is to the regulator. The good things the regulator have started, we want to encourage the regulator to continue it and make sure that we all get to the destination. We will give the regulator all our necessary support. We will continue to keep the relationship, and we will expect that more businesses will be opened, the receivership process be completed better, and I don't think the regulator will want to use the 10,000 cap in the finance house and the savings and loans. I don't think they will want to do that. No, the issue is they shouldn't even start.
They shouldn't even give any cap.
No. Otherwise, you have set to collapse the sector. And I don't think
that's a good way to go. We'll leave that here. Thank you, Tweneboah Aboagye, who's the Executive Secretary of the GHASALC, Ghana Association of Savings and Loans, and Ken Thompson, CEO of Dalex Finance. Area on, we played you excerpts of our interview with Eric Nananipa. My name is Avle. Thank you for watching The Point of View. See you next time.